Okay, this is going to sound slightly odd at first, but I want to tell you why understanding something about one of the most famous goals in sporting history can help teach you something kind of interesting about what's going on in the economy right now. And the goal I'm thinking about happened in a game that's slightly painful, from an English standpoint, which was the 1986 quarterfinal of the World Cup, where this happened. The hand of God, that's Diego Maradona having just deployed the hand of gold to get the ball going towards the net. What you might recall as well, I know this is painful stuff, but nonetheless, there is a reason for this. What you might recall is after that goal, very shortly after that goal, there was another goal, an extraordinary goal. There's a goal that has been voted goal of the century, where Maradona basically ran through, dribbled past pretty much the entire England team and scored this incredible goal. It's amazing. I mean, it's worth going to watch. I would have showed you footage of it here, but FIFA charges us rather a lot to use this stuff. Supposedly they need the money, but anyway, that's another story. But he managed to get through and score this amazing goal. And this is where this gets interesting. And like I say, it teaches you something about what's going on with economics right now. What we're going to do is we're going to analyse where Diego Maradona was, where he ran to in order to score this goal. And have a look at this. So he gets the pass from Enrique, okay? So he picks up the ball around there, but kind of in the Argentinian half. He begins his run, he goes around Peter Beardsley over there, does this lovely turn over here. He's accelerating here, past Peter Reid, going along here, past Terry Butcher, gets the better of him. Also Terry Fenwick as well, and he's kind of accelerating, goes past Peter Shilton, the goalkeeper, and then Terry Butcher comes in, tries to slide in, doesn't manage to do it, and Maradona puts the ball in the back of the net. History is made, an extraordinary goal. But what do you notice if you look at the path that Maradona takes? Apart from this point where he's going round, it's basically straight. So he's dribbling past a lot of the England team, but without actually changing the direction he's travelling in. He's feinting one way and the next, and they dive, anticipating that he's going to go this way and that way. But along the way, it's basically a straight line. And here's where it comes back to the economics. Not that long ago, Mervyn, former governor of the Bank of England, said that actually central banks can do something similar. If they kind of give a hint to the market that they might be able to raise rates, or even just the market expects them to raise rates or cut rates, then the market can respond, like the defenders leaping in, while the Bank of England keeps interest rates going in a straight line, basically doing nothing. And here's where this comes to kind of what's going on in the modern day at the moment. I want to kind of show you UK interest rates. This is UK interest rates last few years. You can see they're at 3.75% at the moment. Remember when war broke out in the Middle East? A lot of people thought, because that's got an impact on energy, because you're not getting as much oil out of the Gulf, that is going to push up inflation. Of course, the Bank of England's job is to tackle inflation. We'll come back to the cost of living in just a moment. But if you look at the expectations pre-war, they were that interest rates were going to carry on going down. Then the war breaks out, and everyone says, no, they're not going to carry on going down. They're going to go up quite sharply. And that's what it looked like in March. Then roll on to kind of where we are today, and people think, oh, they're still going to go up. But actually, having just spoken to Andrew Bailey, governor of the Bank of England, he's like, well, no, not necessarily. Don't take it from me that those rates are actually going to go up. So what's going on here? Investors out there in the market are kind of making their bets. Like the defenders taking on Maradona, they are kind of going in a particular direction, thinking the bank is going to go in that direction too. And here's what's kind of striking. Look at, I'm just zooming in here, looking just more recently at bank rate. Look at bank rate recently. See, flat for all that period. Now compare that to the actual interest rates that are being set by people out there in the market trying to second guess what the bank is likely to do. This is the 75% loan-to-value mortgage rate. So if you're getting a mortgage out there at the moment, this is the average of those quoted rates. Look at what's happened recently. Bank rate, flat, straight line. Mortgage rate, going up really sharply. Raising the question, is that the Maradona effect? Is it actually happening in the UK? The Bank of England leaving rates on hold, not raising them, but the market doing its job for it. It's really interesting, isn't it? And, the only reason that people are a bit nervous about saying, OK, this is what we're doing, is the problem that if people really believe that you're just always going to leave rates on hold, whatever happens, then you're in trouble. So it's all about having credibility. And something that's happened on the other side of the Atlantic is that Kevin Warsh, who's the new chair of the Fed, he just had his first press conference, set interest rates. They said they're leaving rates on hold. And he kind of implied that the Fed is also doing this Maradona effect as well, though of course he didn't mention Maradona, not really a kind of a soccer nation, the US, but nonetheless implied that the market might be moving so much, raising rates, that the Fed doesn't actually have to raise its own rates. And people got a bit kind of nervous about that. In fact, he made those remarks in the press conference, and look at what happened to the prevailing 30-year bond rate in the US. It rose up, and that's a sign of nerves. People thinking, okay, are you actually going to raise interest rates, or are you going to be behind the curve? So, the Maradona effect, it might well be effective, but it only goes so far, only if people actually trust you. As I said, the main job here, though, in the end, is inflation. It is the Bank of England's task to try and keep inflation as close as possible to 2%. That's the dotted line over there. You can see it's kind of come down from that cost of living crisis period. And if you look, it was expected before what happened, before this latest war, to go down even further. Then in April, people thought, oh gosh, okay, higher energy prices, it might go up a bit. Now the Bank of England thinks it's going to be going in that direction. But whichever of those paths you're talking about, take a step back. The impression from this chart is clear. Inflation was really painfully high. It's now low, albeit not quite at the Bank of England's 2% target. But here's the thing about this, and this is an exercise, I've talked about this before, but I think it's worth kind of, talking about it again. This is only one way of looking at the cost of living in the UK. This is a measure of the consumer price index, specifically how much it's changing now versus a year ago. And all inflation is basically a basket of goods and services the typical household tends to buy, and how much that changes over time. And if we just look, not just at the rate at which it's changed over the past year, but at the level of the cost of that basket over time, so you can see it just goes up and up and up, you see something striking, okay? So when I say inflation in the UK, we mostly talk about inflation right now versus a year ago. That is about 2.6%. So that's kind of, pretty low by recent standards at least. But then if, rather than just looking at the last year, that's the last year there of this level of the price of goods across the economy, look back over the past 5 years, so extend that out here, look from there all the way through to there, and that obviously encompasses the cost of living crisis, then you see actually we're not talking about 2.6%, we're talking about 28%. 28%. And for some people, when you're thinking about your cost of living, you've got in your mind this mental reference point of how much things used to cost not that long ago. Maybe it's a year for some people, but for a lot of people, it's a little bit longer than a year. And so a 5-year measure of inflation, it's a legitimate way of looking at the economy. And if you look at 5-year inflation, this is how that chart looks, okay? And that is actually up to the highest level. If we just kind of draw a line here and go back there, it is the highest. Actually, it's more than 2 decades. It's highest in 3 decades, more than 3 decades. And that is the story of the cost of living crisis, with prices really kind of consciously high and a lot of people feeling it, and even now still feeling the difference between only a few years ago. And that could get worse. I mean, it obviously depends on what's happening in the Strait of Hormuz, but it's not just that. There's other things that, for instance, the Bank of England has been kind of pinpointing. For instance, AI. Because everyone is charging towards trying to build as many AI servers as possible, what do you need for that? You need lots of chips, computer chips. And those chips actually are in short supply, particularly memory chips. And those memory chips are only made in a few places, particularly in Taiwan and in South Korea. And if you look at the cost, this is just showing you kind of import prices coming into the UK. If you look at the cost of stuff coming from advanced economies in Asia, it is up at a stratospheric rate. Actually higher now than it was in the period when there was that famous semiconductor shortage back during the pandemic. So there are a lot of forces that could push up inflation. And that's before you get to the question of kind of energy prices and all of the rest of it, the familiar stuff. So the Bank of England certainly has its work cut out. The question now, of course, is whether it's going to continue to do the Maradona effect and keep interest rates on hold, or whether it eventually actually has to raise them.